Netflix is down quite a bit. Should you buy? Should you sell? Let me know in the comments down what you're doing right now. What's going on, guys? Welcome back to the channel. If this is your first time on our channel, welcome to the channel. My name is Travis Sickle. So I don't normally talk about stocks on this channel, but I thought because Netflix is getting hammered today, that it would be a good opportunity to kind of talk about it and show you exactly what you should be looking for when you're looking at stocks. And a day like today, I get a lot of questions on it. Hey, Netflix is down a tremendous amount. In fact, let me just go ahead and bring it up on the screen. And I'm going to bring up Yahoo Finance. Now, I'm not going to bring up my own trading platform because I have a lot of personal information on there, but Yahoo Finance is a great place to go. So is Google Finance, just to get quick numbers. But look at this. It is down 35%, and even in after-hours trading, it is still looking like it's going to go down further. So that is just the share price. That's all this is. This is a reaction. This is a complete overreaction to the news yesterday. Now, that doesn't mean you should buy it. And this is what I want to point out. If we just scroll down here for a second. So obviously this is the worst day of reading headlines, worst day in a decade. Netflix had negative subscriber growth. So they lost 200,000 subscribers, again, according to the headlines. But you have to read further. So let's just go ahead and look at some of these headlines that we're looking at. Netflix not sold on sports as analysts push for other sticky things. So they want sticky assets. I'm sure that's what that article is talking about. Netflix's broken growth story. I don't know if that's true. Netflix has the most to lose from increased streaming competition. They've had competition for a while, but only this quarter they're showing negative 200,000. And there's another reason why, and we'll talk about that in a second. Netflix, the exciting news in the streaming giant's earnings. Now, I didn't read that article either, but my guess is that article is referring to Netflix talking about having ads as an ad platform. So you don't have to actually be a subscriber. They'll just run ads like they do on regular TV shows if you still have regular TV, which I do not. I've cut the cable, so I do not have that. But, you know, if you're watching Netflix, you watch YouTube, right? So it's the same thing. They have ads on YouTube, or you can get the premium service with no ads. That will give them the ability to have significantly more revenue from a lot of the people that aren't subscribers. So that is probably a big opportunity for growth right there. But that's not why we're making this video today. Let's go ahead and flip over to Google Finance, because this is a little bit better with showing the rates of return here, and it's free to use. So the 1 day, you can see right up here, the rate of return down 35%, 5 days down 34%, 1 month down almost 40%, and year to date down 62%. So it is taking a beating this year. But that doesn't mean that you should just go run out and buy it just because there's a dip. Should you buy on the dip? If it's a good stock that makes sense to buy it, you should buy it on the dip. But you have to figure out why it went down. Was it justified? Was it unjustified? Or if it was justified, did it go down significantly more to make it something that you would want to buy, an undervalued pick, so to speak? Here's exactly where you should be looking, okay? Go to netflix.com. This is the place that I would go to tonight, and I would pull this up and read it, because that's exactly what I'm going to do. It's the investors relations page. Every company, every publicly traded company has one of these, and I haven't seen this page before, so let's just go ahead and figure this out. We have the SEC filings, so you can look at those, and what we want is the quarterlies. So this is the April 19th, so this came out yesterday. That's the 8K, that's the quarterly. We can read the PDF version, and we can go through it. But I wouldn't just read this. I would look at the annual report, because it's going to give you a lot more information on how the company is run, and that is what's really important. So we want to look at these two reports. Even though if you've never read one, just force yourself to go through it and read every single line of it, because there's going to be things that you're going to uncover that you wouldn't necessarily realize. So I haven't read through this report, so I can't tell you, give you a specific example. But what I can tell you is that the headlines are starting to come out to tell you other information. And if you dig into this report, you're going to be able to uncover it. And I'll probably go through this report tonight because, yes, Netflix has gone down quite a bit, and it seems unfounded because they have over 200 million subscribers, and they just had a loss of 200,000 subscribers. That's like nothing. It's nothing in the grand scheme of things. Now, there's another piece in there that's very interesting for Netflix specifically, and that's the fact that they are reported to have lost 700,000 subscribers from Russia alone. And that's from a decision that they made not to have any subscriptions running in Russia because of the war that's going on with Ukraine. Now, I don't know if they fall into a category of suspended or if that is actually considered a net loss, because that's what it sounds like to me. But again, you're going to get that from this quarterly report and you're going to match it up. You're not going to see that on the annual because the annual, this is the quarterly report that came out yesterday. So it's likely to be in there, and the reason why. So if there was no war in Ukraine, they would have positive numbers. And I'll go out on a limb and say that they probably wouldn't have had this much of a down day if it wasn't negative. But it wouldn't have been negative because of the war. Now, again, I'm not saying that's why you should buy it, hold it, or sell it, whatever. I'm just making an observation that you want to look further into it rather than just saying, hey, they have a lot of competition. And sure, those headlines are going to come out. They didn't come out 3 months ago. They didn't come out 6 months ago. It didn't go down 35% 6 months ago when then all these other platforms were still out there. You have Hulu, Apple, Disney. I think, doesn't Disney own Apple? I don't even remember. I don't even know about these other subscriptions, but I watched them all. So a lot of people have multiple subscriptions. It's not like going out and buying something where you're only going to buy one of it, like a house or a car. You only have one decision to make. You don't. You can have all of these platforms. They're all relatively nominal. So a lot of people have multiple subscriptions. I think I read in one article, the average household has something like 5 subscriptions to streaming platforms. I mean, there's a ton of them out there. Even YouTube has the streaming platform, the premium platform that I mentioned before. So there's all this competition in there, but you have to cut through the noise, look at the company, look at the opportunity. I do think that there's a lot of opportunity with all of these streaming platforms to take it in different directions. The sorting features on these platforms is terrible. So if one of them gets better at it, they can sort their shows and make it a better user experience. So then more subscribers would go to that platform, and there's absolutely a ton of growth. Think about it. There's 8 billion people in this world and 200 million subscribers, and they're worldwide. So I know that that kind of vignette or whatever you want to say is used across all different businesses, that yes, the world has 8 billion people, so that's all the people that could possibly buy. But with Netflix, I mean, it's competing directly along with all the other streaming platforms with cable. And I think in this instance, it's not Netflix that's the dinosaur, it's cable that is the dinosaur. So dig into the annual report, dig into the quarterly report. Let me know what you think in the comments down below, but that is exactly what you need to do. You need to read the annual reports before you make these decisions. You can't read off of headlines and charts. That is a recipe for absolute disaster. So hopefully that piece has helped kind of understanding how I do my own investing. That's how I do it. I read these annual reports. Sure, I read all of the headlines to see what the people are thinking, but it's never the driver of a decision. Never. Unless somebody points out something that I didn't read in the annual report or I missed in the annual report, which is usually not the case. So you have to read the annual reports, read the quarterlies, read the news, put it all together to make an intelligent decision. Do not make it based on a chart that said this stock went down 35% today. It creates fear, and maybe you're buying, maybe you're selling, but it's unfounded. So hopefully this has helped. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.